It also talks about certain types of requirements. This should sound familiar from when we talked earlier about auditing. We have an unconditional requirement and a presumptively mandatory. So presumptively mandatory, it's presumed to be mandatory. That's something you should do. Unconditional requirement means it is unconditional. You have to do this, which says the word must or is required to. So there's no alternative. So some of these standards pronouncements we'll talk about, is it what we call an unconditional requirement, you have to do it, or is it presumptively mandatory, something you should do? And then finally, engagement level quality control. The engagement partner is responsible for the overall quality of the engagement, the direction, the planning, the supervision, the performance. Also the report, if you're giving a report. And I say if any, here's why. As we continue, preparation of financial statements has no report. There's no report. Basically, all you're presenting are the financial statements that are basically going to be saying that no assurance is provided. It's clearly stated in the statements, no assurance. In a compilation, you're going to have a report, but it's going to be one paragraph because they dummied it down. It used to be 3 paragraphs, add another paragraph, 4 paragraphs, and it looked like it was doing more than it was. You're giving no assurance. Let's make it 1 paragraph. The review report, 4 paragraphs, and it kind of looks more like an audit report with management's responsibility, accountant's responsibility, accountant's conclusion, and which is the limited assurance. And then, of course, an audit we've already talked about in the past. But again, SSARS is covering these things. That's what today's topic is. So again, understanding that whether or not you're issuing a report in compliance with the quality control policies and procedures. Clients management, acceptance, engagement documentation, and so on. It says, before accepting or continuing engagement, the accountant should consider the ethical requirements. Are they satisfied? Reliable information is available, because if there's no information, you can't do the work you need, whether it's reading the information or understanding the policies and procedures. There's no reason to doubt the client's integrity, because again, whose statements are these? Management's. If they lack integrity, we can't put much reliance on those numbers. The financial reporting framework selected is acceptable, meaning is it again, a general purpose framework? Is it a special purpose framework? What framework are we using? Is it OCBOA? Is it US GAAP, IFRS? Compliance with laws and regulations. Oops. Management. And then this is important. Management is acknowledged responsibility for. These are the things they're taking responsibility for. The framework, internal control, and we talk about DIM. Remember, we talked about DIM, design, implementation, and maintenance of internal control. I mention that because you will see that in some of the reports. Preventing and detecting fraud, compliance with laws and regulations, the accuracy and completeness of the information, providing the accountant with access to all relevant information. So that's, again, what the general principles are talking about. And again, these are the general principles for engagements that we're going to perform. So as we jump into the meat of all these different types of engagements, we're going to have to learn about them. The key to remember is ARC 60, the general principles of financial statements, ethics, professional judgment, the conduct, and quality control. They relate to all 3 of these engagements that we're about to jump into, whether it's preparation of financial statement engagement, whether it's a compilation engagement, or whether it's a review engagement. So what we're going to do in a minute is continue on with that, but now get into the meat of what is a preparation engagement versus a compilation versus a review.